Hello and welcome back. Let's chat commodities now, where we have seen the volumes quite on the lower side ahead of the important data today in the evening. You have the ECB monetary policy. You also have the US Q3 GDP numbers coming today in the evening. So ahead of that, it's a bit choppy continuing there. The gold and the silver prices, of course, flat to slightly in the negative. That's pretty much the scenario for energy as well, where we did see some buying after the European markets had opened, but on your screens, it's red again. The base metal prices in the meanwhile also have seen some attrition coming in. You have seen copper prices just about holding on to those 7,100 kind of marks. In the Indian markets, though, you could be looking at some support coming in for base metals, and that's purely because of the rupee depreciation calculations. Let's get in then. Viral Shah, he's head institutional business, Geojit Comtrade, and he joins us live on the show. Viral, hi, welcome. How are you looking at the energy space to start with? Because the last previous 8 weeks have been quite on the negative side. We have seen some buying coming in last 24 hours, but do you see it holding on?
Yeah, I think for the time being, the energy prices could be holding on at the current level. On MCX, we think that the market would have possibly made an interim bottom about 5,850 levels or so. And currently trading at about 5,950 levels, we would recommend going long in the market with the potential target of reaching 6,050 or 6,070 levels or so.
Viral, how would you look at the natural gas prices as well? Because there has been some decline into that one, though the gasoline prices, of course, in the international markets have run up quite a bit, and that's because of the demand that's risen the most since July. Do you see the winter demand now trickling in? Do you think that would support most of these energy products?
Well, it could be one of the fundamental factors because, over the last 7 or 8 weeks, we've seen a continuous hammering of the energy complex, and at some point in time, there could be some bargain buying aided by some fundamental factors that could support the market. And I do believe that the impact of the winter demand would start creeping in from November, December onwards, and we would see some amount of support or some amount of base coming in for the prices at current level. So we would not go aggressively short in the market either for crude or for natural gas at the current levels.
Viral, how would you be looking at the precious metal space? Because on one side, there's not much of a physical demand coming in. On the other side, there is this Fed stimulus which the markets are watching out, the uncertainty of when it would start. Between all of this, how are you looking at the prices?
See, Manisha, in terms of both gold and silver, the markets have been quite range bound in the last couple of trading sessions. You have seen the impact of the rupee movement more in the MCX prices rather than the actual markets swaying. However, I think on MCX we would, for the intraday basis, look to go short on silver at about 48,800 levels. Ditto for gold as well, where we would expect some amount of correction. But in the long term, I think silver prices had made a bottom of about $18.50 sometime in August, and we are just about 7-8% higher from there. If the Fed stimulus policy is in place till middle of 2014, then there could be some spillover effect of demand coming into these markets as well. So I'm not too very bearish for either gold and silver in the long term, but yeah, in the short term or probably from an intraday basis, I would want to go short on the market.
Let's talk about the base metal space as well, and this space really is data driven, and while we did see the US services sector gain up into the markets are slightly bearish about the kind of numbers that you could see in sense of GDP or payrolls as well that would come in tomorrow. How are you viewing all of these fundamentals?
Well, again, in the case of base metal, and I would like to talk about copper probably to start with, is that we have seen a very lackluster trading. Again, the movement in the MCX market is predominantly because of the FX fluctuations and less to do with the actual, plus minus that we see in the overseas markets. Having said that, I think for the short term, we might see some amount of dips coming into the market. We might see, strong commodities like lead, nickel, or even zinc showing some sort of weakness today. This could be offset by the weak rupee dollar market, but overall you would expect some amount of correction coming into the market as such. Maybe in about 2 or 3 weeks time, once you have some more clarity about the US.
Alright, so that's the view really coming in for the base metal space as well. The clarity, of course, would come in for the next few days there. There is loads of data in the international markets, which the base metal prices seem to be following at this point in time. It also has to do with the some strength in dollar index, which is putting pressure on all of that asset class. How would you look at that, Viral? Because while it's a lot of data coming in, the strength in dollar also is something that's putting some pressure.
Well, it has put in some pressure, but by and large, I think we are in a very tight range right now, and the markets have not given so much of ground. So I think if the data starts getting slightly more positive on the fundamental side, then I would expect that the base metal prices would start recovering from here on.
You know, as we had spoken to some analysts in the past, and most of them think that base metal as a sector is something that could really outperform energy as well as precious metals as well as we go forward in next 3 to 6 months. Would you have a similar view?
Yeah, I think to a certain extent, when you look at base metals or precious metals, the market has been on the downswing since maybe 2010 or 2011, and it's really not been able to capture those peaks all along. I think there could be a possibility whereby the strong equity markets worldwide would have somewhat of rubber effect in terms of asset allocation, and some spec money could also start flowing into the markets as such. So I would be of the camp that the markets can possibly start outperforming the other indices in a short span of time from now.
All right, fair point. We'll let you go at that. Viral, thank you so much for joining us and appreciate your strategies on all of those commodities.